Wondering if we could start with you, Cathie. Your thoughts on Ethereum and what's going on in the decentralized finance landscape and how that adds to the sound money value proposition that Bitcoin brings.
Yeah, I think we've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first, but we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures, which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income markets. The ridiculous rallies that have taken place, taking junk bond yields down to just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see, one of the things that has struck me from the beginning, and when Chris started at Ark, which was very close to the beginning of the firm, I remember saying very early on, follow the developers. Well, using that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs, have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected.
So you guys are bullish then on Bitcoin, bullish ETH.
Yes, indeed.
I would add to when Ark was beginning its investigations into crypto, Ethereum didn't exist.
Right.
If you go back to 2014, it was just an idea. When Ark first established its Bitcoin positions, Ethereum, the network, had just launched a few months prior. I remember, knockdown, drag out fights, arguments in Ark brainstorms. I mean, that's putting it too harshly, but contentious debates around the DAO in 2016. Ark is full of varied viewpoints, and I think that's part of its strength, right? Allowing everyone to express their viewpoints. But when the DAO happened in 2016, that was, at least for me, the catalyst of, oh my God, this thing just raised over $200 million from people all over the world.
The narrative for Bitcoin is pretty much set in stone, and it's kind of very easy to make the case for Bitcoin as an investment, but then by extension, kind of value the different opportunities. I think with Ethereum, it is a little bit different in that investors have really yet to converge on a primary narrative on how to value ETH. And I think that also has to do with the fact that the narrative is evolving in the same way that Bitcoin's narrative has evolved. One of my biggest breakthroughs in thinking about, how to value ETH, especially compared to Bitcoin, and something that Cathie alluded to, is that Bitcoin and Ethereum are differentiated enough where they can coexist. And in a lot of ways, it isn't really a zero-sum game. It's a positive-sum game where you're unlocking kind of new pockets of value that otherwise were non-existent. With Ethereum specifically, I think there's a question of Ether as like this natural resource, this digital commodity. And if you think about as the general economy transitions from the physical to the digital world, that Ethereum can command a sizable premium relative to physical commodities that otherwise Bitcoin could not. And so when you kind of think about oil or coal or kind of general commodities, those are in the hundreds of trillions of dollars in market cap or in value. I think increasingly we're starting to see ETH as this productive financial asset, and something that you guys kind of introduced as the sort of that internet bond. And that is sort of broken away from Bitcoin specifically, kind of with the general consensus algorithm of Bitcoin versus ETH, especially as ETH transitions to proof of stake. But when we kind of think about valuing ETH as a productive asset, that's where I think it's deviating a little bit from Bitcoin as sort of that non-productive monetary asset. And so when we kind of think about the potential value accrual there, you can kind of think of it as the same way that you might value a traditional bond. And so you can kind of guarantee this sort of yield, this kind of risk-free rate perhaps that ETH can generate. And I think that because it's native to the internet, that's what makes it so unique, right? And then that's sort of that last narrative of perhaps, Ethereum is a new country or a new nation state, that sort of digital country. And so that's one that kind of transcends borders, and one that is native to the internet. And so the way that I kind of like to look at Ethereum, what excites me most about Ethereum is in the context of kind of this ever more globalized world, right? Where we're all increasingly connected to each other. And so there's going to necessarily be demand for cooperation on an equally global scale, and one that doesn't rely on traditional means of identity or legal assurances. And so when you think about Ethereum as an experimentation layer on which you can build these economic primitives with little counterparty risk, that's something that's very exciting. And I will admit that's not something 2 years ago that I would have been completely sold on.
The cost of capital in the traditional world is really dependent on the bond market. How risky are you going to get based off of the yields you can get in dollars on the bond market? But now that we've unlocked this new internet native risk-free rate with Ether staking, how do you think that's going to impact global yields and global investment appetite as Ethereum gets more and more adopted, if it does get more and more adopted over time? Well,
I think part of the heightened regulatory talk here in the United States and elsewhere, but it's really taken off in the last few months here, is because what you are talking about, the yield, has attracted so much interest that the banks themselves are beginning to feel it. I have been shocked. I listened to especially JP Morgan's call. It's a good kind of staple to understand what's going on in the banking industry. And, in a V-shaped recovery, Jamie Dimon was telling us that their loan growth would be negative through the end of this year. I said, what? And I began to think, could it be? Could what's going on in the Ethereum world already be impacting banks? Prices are determined at the margin. And so this could be really hurting the banks. And I think I'm going to take a very close look during the next few earnings seasons to see if we can dimension it. It doesn't seem like it is big enough yet. But I'm beginning to wonder, the search for yield, which again, the extremes, the bond market in the traditional world, I believe is in a bubble, certainly on the corporate credit side, which is where the risk is. And I can't help but believe that others believe the same and are searching elsewhere for yield, especially the hedge funds. I would say. That's the first thing that comes to mind when you ask your question. And now you're going to have to rephrase your question if you want me to go any further.
Well, I just want to follow up on that, because the podcast and the movement we have here is called Bankless, right? So we've seen this for a while, but we're actually not sure that the banks are actually worried about it right now.
Oh, I think
they are?
Oh, definitely. I think part of the regulatory heat that is taking place now is because the banks are beginning to see how much this is going to hollow them out.